Investors and traders, welcome to the channel Market Chart Pattern. Today is 27th of August 2023, and I believe and wish everyone is having a fantastic weekend. In this video, we are going to review the key US stock indices, the S&P 500. We'll take a look at the longer-term cash index. We will also take a look at the future markets. That's going to be the E-mini futures, the Nasdaq 100 futures, and also the Dow Jones futures. We'll also take a look at a key market for this week. That's going to be the US dollar index. And also we will look at the debt markets. We do that through the eyes of the longer term 30-year treasury bond futures and also the 10-year treasury notes. This video is for educational purposes only, and it is not a financial advice. So guys, what we are looking at is the weekly chart of the S&P 500. This is the cash market, and what we are looking at is this completed pattern ABCD, which is much more clear on the daily chart, and we will just get to that in a short time. So here last week we were looking for a bounce in the market, and we did get a bounce, but what in fact has happened is we got a roller coaster of a market, up and down, up and down. And if on a weekly basis, on the weekly closing basis, last week was an inside bar formation. Nonetheless, it was a positive or a bull bar formation because the close of the week was higher than the open of the week, and that is what we see, a bullish candle formation here. However, what it is also telling us is something really key that we need to watch for, a price level, and that is 43.55, which is pretty much the the low of the last week, around 43.56. If we get a weekly close below this level, then it indicates that perhaps this correction is going to take a bit longer, and it might actually take into a formation of ABCD, which we'll take a look at on the daily chart. And also we are entering a period of time where the seasonals are going to be weaker for the stock indices, and if this pattern formation is going to unfold, then the chances are that this correction is going to get extended into the month of September, and maybe into the October, because of the seasonality. So let's take a look at, by keeping this 43.55 in mind on weekly level, and let's take a look at on the daily chart. So this is the ABCD formation, which is completed right here, and as we have seen on the weekly chart, and also came very close to this 78.6% Fibonacci retracement. And what we were discussing at when the market was approaching this level was that if the market is strong, then and is able to maintain higher levels of price on closing basis, then the chances were it was going to go and tackle and challenge the all-time highs reached. If not, then we expected a pullback and market entering in some sort of a correction. So what has transpired is that the level of 78.6% Fibonacci retracement, along with the one-to-one projection, which we like to call the ABCD pattern, the market has pulled back, and it has pulled back into a key level that we were watching, which was around 43.25. We've got some structural support coming in right here. There were a few other levels that we were also watching around this one, so it was giving us some level of confluence, but the important thing is also the structural support coming here. Now, as mentioned, that 43.55 is the level that we are watching on the weekly closing basis. If the market begins to close below that, then the chances are that this correction might actually take a form of ABCD formation. And if in fact, or if we assume that that scenario transpires, then we could have a ABCD leg like this, which is assuming that the Thursday 24th of August is the BC swing in our ABCD. So unless the market moves beyond this or higher, and maybe go and tackle the 61.8% Fibonacci retracement around 4,500, that will change the pattern. But for now, just looking at this, and assuming that 38.2% is where the market found a strong resistance level. In stronger trending markets, 38.2% Fibonacci retracement is a a key retracement to look at. In that scenario, we are just looking at the pattern formation, assuming this is going to be our like A, B, this is the BC swing, then the CD swing will take us right here into 4180, roughly speaking, which is also the 38.2% Fibonacci retracement from the lows of October 2023, excuse me, 2022. And also we have this nice trend line support coming in here, and we have this structural support coming in right here from point B. Let me just move the point B around here. And there are going to be a number of things coming together around this, and we are looking at the cash index, and this is, in my opinion, where the game will be played, in that sense that this will be a really key pivotal level from a price perspective should the market get there. Moving below this on closing basis, especially on weekly closing basis, we'll have to reevaluate, and this ABCD pattern formation, that could begin to have a different connotation or meaning. But for now, we will be watching this level 4180 really closely should the market break 43.55. So that's the level that we are watching. Now another market that we are watching, before I move on to the futures for shorter term, is the US dollar index. Okay, so let's take a look at the dollar index chart here. This is a market that we really need to pay close attention to, because over the course of a few weeks, for example last 5 weeks, there has been a pretty not a very strong correlation, but there is a strong correlation between the S&P 500, for example, and what is happening in the dollar index. So the as the market entered into its pullback / correction, the dollar index has been strengthening, but now it's approaching certain key levels that we need to be watching for. So one of the key levels is that it's approaching, not quite there yet, there's about 100 points left, is the 38.2% Fibonacci retracement. Now I have drawn this from right from the top, but the reality is that we can also take this top as well, and the reason is that because there were two attempts where the market tried to take these highs out, wasn't able to do that, and a market just rotated lower, and it's just been going lower and lower since October of 2022. So we can also take this part as well, and if we take this one, then our 38.2% Fibonacci retracement moves a little bit lower. But the key part is this is the ballpark figure, and the other thing to keep to watch for is also this concept of symmetry. So the last time we had a pretty significant rally was for about this much in magnitude, and if we just project it from here, then we are also we are coming very close to this level around here, around 104.50, roughly speaking, and 104.85 to 105 roughly is the 38.2% Fibonacci retracement, given where we draw it from. So this is going to be, in my opinion, really pivotal as well. If the dollar index begins to find a resistance from this level, it means that the stock market indices might find some relief, and we could have a rally, and then we'll have to watch where that rally might take us to in terms of price action levels on the major stock indices. And of course the key levels that I've mentioned on the SPX S&P 500 cash index, those need to be watch really carefully. So this is the dollar index part, really carefully we'll have to watch that. Let's take a look at the debt market. So this is the treasury bond futures. This is long bond futures chart. This is the 30-year duration, really long term. When we took a look at this last time, we were watching for this pattern formation, and we were really watching for the market would get down and challenge these lows. This in fact took place, and what we have also seen is from really oversold conditions, market has had a nice bounce, and it's possible that it might continue to bounce from here and finally get some resistance around this 20-day moving average, or maybe even higher. I haven't drawn the Fibonacci retracement on this, but let's say if we just take this entire swing, then just the 38.2 comes around 121.20. So there's a possibility it might even rally up to here. The last time it rallied for, I believe, a couple of points. So yeah, that again really takes us to 38.2% Fibonacci retracement. So this is going to be the key level to watch here as well. And if the bonds begins to rally, usually it's what it means is that the interest rate, the yields will be moving lower, and that could help the stock indices as well from a potential rally perspective. Let's take a quick look at the 10-year Treasury futures. Similar kind of pattern formation. Again, it found a resistance, the support from here. Now the rally hasn't been as strong as what we have seen in the longer duration 30-year bond futures. Okay, let's take a look at the E-mini S&P 500 futures here. So here again, let me just move to the weekly chart here. So this is the weekly chart. We have already seen the weekly chart of the cash index. That is the one which I like to use for longer term. The S&P 500 futures work really nicely for a shorter term. And here again, the key that we are watching for is this level around here, roughly speaking. So 43.66, if it begins to close below that, and we really have this nice 20-week moving average in blue line right here, and on a weekly basis we begin to get a close below 43.70, 43.66, that's an indication that we might actually be then moving in an ABCD pattern formation lower, and we have the key level to watch will be around 41.80, which I believe is also the 38.2% Fibonacci retracement. Okay, and on the futures, yeah, that's also a 38.2% Fibonacci retracement, so very similar to the cash index. And we'll just move quickly to the daily chart, and I haven't drawn this ABCD formation, but you get the picture. We have already covered that in the S&P 500 cash index. And let's take a look at the NQs. This is the chart of NASDAQ 100 futures. Again, I'm not going to repeat the ABCD pattern formations here. You can watch the previous videos where we covered these. And a number of things were coming together when the market was approaching the 78.6% Fibonacci retracement, coupled with all these ABCD formation here as well. And that's why, we had mentioned that the key pattern formation was in fact complete. But the market was pretty strong and it just bounced up and down. In fact, it went a little bit higher. And then it went into trading range and began to trade lower. So what is important here to see is that the rally, as we were expecting because of the oversold conditions, it rallied up to the 50% level. So this index has been much stronger than some of the other indices that we follow, whereas what we have seen in the S&P 500 is that the market rallied to about 38.2% Fibonacci retracement, but the NASDAQ futures, they rallied to about 50%. Now, if that scenario transpires, that where these key levels that we are watching for, they begin to break to the downside, the ABCD formation here could actually in fact take us to 14,050, so 14050, which is also the 38.2% Fibonacci retracement of the lows coming in from, so this is the one which I have drawn from December. Again, these lows are very close to the lows of October 2022. So we could have this ABCD formation taking place, much like what we have seen in the cash S&P 500 index. Again, those key levels, especially the one I mentioned on the S&P 500, we need to watch that really carefully. Whether that's going to happen or not, I do not know. There is not a really nice trend line where the market is also sitting there. It's possible that it just goes into a sideways correction, excuse me, sideways price action, and it might take a few days, trading days, before the market breaks on the either side. Let's take a look at the Russell 2000 as well. So I'm gonna move to the weekly chart here. The Russell 2000, again, as we mentioned last week, it's just trading sideways, and also it's just really hanging around its 20-week moving average right here. The important thing to also note is that this has gone into a really long trading range right at the 50% retracement level. Now, a very important one to watch is the Dow Jones E-mini futures. So this is the chart of the Dow Jones E-mini futures, and if we just draw a trend line like this, so the market has been pulling lower, because I will show that on the daily chart. It has completed an ABCD pattern formation right here, and for the last 4 or 5 weeks, it's just pulled right into this 20-week moving average, and then we have this trend line support coming in here. So again, just like the S&P 500 index, the cash index we saw, it's really important to watch for this one, and if it begins to close below this 20-week moving average, which is around currently 34,300, it could indicate that maybe there's going to be a rotation lower, and yeah, and in fact it might take into the ABCD formation, the one-to-one projection. And also, again, as I mentioned in the beginning of the video, the seasonality is kicking in with September and October, where we could see the market actually extend into a trading range to price moving lower. So in other words, extended correction moving into end of September, and also possibly into October months as well. It's also important to note that this is the year which is before an election year, which is coming in 2024 next year. That's a topic for another video, but I just wanted to mention that why sometimes the year before the election year is really important as well, because of the election year cycles. Okay, so here this is the daily chart of the Dow Jones E-mini futures. We can see a BCD pattern, beautiful formation right here, and the market has pulled back right into here, right at the 38.2% Fibonacci retracement, and currently is testing its trend line support, and we have the 20-week moving average right here. Excuse me, 200-day 200-day moving average around here. So again, as we mentioned on the weekly chart of the Dow Jones E-mini futures, if the market begins to close below these key levels around here, which I mentioned was on the weekly chart, around 34,300, yeah, and this on the daily is around 33,800, so 3,400 roughly speaking, 34,300 roughly speaking. We could have a bit more correction to take place. So this is what we are looking at in terms of price action. The S&P 500 chart, the cash chart, is really important that we need to keep on watching on a daily basis. And I'll try to make more videos next week, and try to cover these things more frequently for you guys. My frequency of the videos might increase for next week, and I'll try to cover also the stock market, the key stocks that we follow as we go along. So thank you very much for watching the video. The video is I do apologize, it just got a little bit longer. If you like how we do the analysis, then please do subscribe to the channel, and if you found the video of educational value, then please do click the like button. Thank you very much. Good luck and good trading.